Sign up for Bitcoin Miami, link in the description below if you want to get a 10% discount on general admission all the way from $900 down to $800. Or if you want to go to the after party, $50 or anything you need, 10% off anything, even the whale pass. If you want to get in for $9,000 over $10,000, let us know. Jump on it today to Bitcoin Miami. It's going to be a blast. I'm excited. You should be excited for Bitcoin Miami, baby. Yeah, baby. Yeah. Bitcoin 2023. TikTok next block, May 18th to 20th on Miami Beach. Not even in downtown Miami, all the way in Miami Beach. You will absolutely love it. Bitcoin Miami, baby. Bitcoin Miami. It's happening faster than you know. It's going to be here. Do you want to miss out on the coolest time in the world? Do you want to miss out on meeting some of the greatest people in crypto? Do you want to miss out? No, you do not. Jump on in today. Pepe is still trending. Is it going to go all the way to Coinbase? Looks like it's going to get pushed up on Coinbase. It's happening faster than fast. Watch out for these airdrops. A lot of them are fake. You'll click on them. It'll drain your wallet. Just be very, very careful. Remember, nothing is free. Nothing is free here. Nothing is free. Shout out to everybody on the chat. Shout out to West Saldivar, my man. It's been a while. Shout out to everybody here. Brett Mohar. Shout out to all my team and everybody here on the live. Thank you for jumping on in. Pile on in. Let's go. Let's go. Some of my biggest views ever on Fed Day. Let's see what happens today. You never know, baby. You never know what's going to happen. We're going to watch and we're going to see history in the making. My prediction is a 0.25 basis point. Okay? That is my prediction. A 0.25 basis point. And we're going to be dovish. Then he's going to come out and say he's not going to be able to raise the rates anymore. But only time will tell. Only time will tell. All we can do is speculate. And get ready. Here we go. 3 minutes to countdown. Even though it says 4 minutes, I'll be up at 3. Shout out to everybody here on the live. Thank you for being here. Appreciate you all for jumping on in and sharing your most precious asset with me, and that is your time. Welcome to the Crypto Lifer Show. Hope you're having a good time with us here as we continue with the Fed rate hike. It's about to come on us pretty strong. We're going to bring down the music here. We won't be playing the music, and we're about to see right now what the Fed hike is. Here it is. Here it is, 2 o'clock, and show me the money. Boom. It comes in. Let's take a look here. Let's take a look. Next formal meeting is 40. We got 41 days to the next meeting, which is pretty awesome. And let's see here. Let's see here. Okay. I believe it is 0.25, but let's find the news. Will just give it to us now, right now. Fed rate hike today. We're all pretty sure what it was, but let's just make sure what it's going to be. 75 basis points? No, actual 5.25 forecast. So it was 2.5 basis points. They raised it from 5 to 5.25. They raised it up to 5 basis points. That is the decision in the market. That was baked in, right? So it kind of tells you that we probably should get a bit of a move here. And so far, we talked about my 7-minute flag here, and we did. Look, the 7-minute flag broke to the upside. Bitcoin got the push out of this chart here. Now, the 7-minute will reset, but it's probably likely to continue to the upside. Then we're going to wait to see what he says, if they're going to stop any rate hikes at all. But I'd like to see us back above 28,500 in the point of control. Really, really nice. We were seeing if the 7-minute would dump on us, but it came back down, and we actually just got the reversal to the upside. And there we have it. Bang, bang, bang. 0.25 basis points is exactly what we're seeing. That's exactly what happened. That's what we were waiting on. And here we go. All right. Shout out to my pops, man. Still going to keep his, a memory of my dad right there. 28,600, and it was baked in. They come out of nowhere and did a 0.5. We may have seen a bit of an issue here, but it was baked in, and we got the move to the upside for Bitcoin. Now, it was barely retesting here, but it got back above the side. You can even say if you wanted to. I was just showing you like basically a bullish broadening wedge in that they break to the upside. Now, what we're going to see here is usually a retest of the top of the broadening wedge. We should bounce off this and get a move to the upside. The measured move is the length of the pole, like I said. Right here, it depends what Powell says and all that fun jazz. But the length of the pole, somewhere about here, brings us back here. And that's the top of this bigger triangle that we discussed. All right? that we were talking about earlier today. So far, so good. We avoided the pull down of the falling wedge for now. So we can get rid of that, right? We'll still give you where this, that symmetrical triangle is right here, though. We're still in this symmetrical triangle. I'm going to get rid of this too for now because that's all speculative. But right now, what we're watching is, if I can not slip up there and press the wrong button. Right now, what we're watching is this symmetrical triangle, right? And we eventually a bigger move is coming because we're getting tighter and tighter in the triangle. And it's only a matter of time. A move is coming out of this symmetrical triangle. You can see once we get to that point, a move is coming here to the upside or to the downside. It's a 50-50 shot. Either 34,000 is the measured move or down to 23,250. So, and then we're going to watch Jerome Powell speak together, and we're going to see what he has. Before you know it, he's going to be here. So send in your tickers if you want to go over a bunch of coins. It kind of gets us through the time. Any ticker you need, let me know. Basically, super chats are free right now. You can send them in if you want those. Super chat, whatever you want. Let us know. Valeria Games heating up. Don't fade gaming tokens, man. Casper is going nuts on this live. Let's take a look at Casper, man. CSPR, one of my favorite coins in the game. You know I love my Casper, baby. And nice pump for Casper to the upside. I put it in this area, suggested that it would pump. Daly's struggling a little bit. We got the pump to the upside. Let's take a look at our 1 hour time frame. I don't know what you're saying. You said Casper is going nuts on the live. What does he mean that? Anyway. Yeah. So here's the deal. There's a big move coming here out of this cup and handle. Casper, the coin here. I love Casper. You know what I mean? Really nice project. Beautiful project. I don't see it going nuts, though. Interesting. I see it just kind of flat. But I see this giant cup and handle for Casper. Only a matter of time. We got the smaller measured move here and the bigger measured move as well. And it's only a matter of time that we get a bigger push to the upside, man. And, there we have it. So shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here, sharing your most precious asset with me, and that is your time. If you want to be anywhere, you're going to be here. We're going to show you more than you would ever think during this meeting. We're going to have BOOKMAP running. We're going to have the 1 minute candles running. We're going to blast off and get excited. Get absolutely excited because we are going to see some volatility as he begins to talk. Every time we've done it, it's been absolutely insanity, and I could only imagine it doing it again. So stay tuned for more. And we talked about VELO earlier today, huh? Got about a 24% gain out of VELO from the bottom of the area. I'm looking at the macro idea for VELO, and I believe VELO can do some serious damage off the 786 Fibonacci level to the upside. LPOOL looking interesting. That thing actually just decided to moon. Since about March 5th, it's been mooning like you wouldn't believe. ARKER, which was put out by my trading group earlier today, had a nice blast to the upside. VET3, the short for the alts, kind of got a little bit of a dump there. Origin Protocol, which I saw in this giant cup and handle. Still, what you want to look at is cup and handle or not. What's going on here is you're getting these elongated bulls, and that's rounded bottoms pay the bills. That's when I start looking at coins and start getting tempted to buy when the rounded bottoms. Let me show you like polka dot before it blasted. I'll go back in time for you to teach you. It's always a teaching moment here on the channel. There's always a chance we can show you what's happening and break it down for you. All right, in about not too long from now, we will be going over the Fed rate hike meeting, and it's going to be absolutely absurd. So get ready for that. When Jerome Powell speaks, I have it waiting right here. I have the Fed rate waiting right here. We will slip to this tab. We will keep it moving for you. I don't know why I have so much tabs open. It's kind of how I am. I'm a tab maniac. I don't know if you know those people that just tab it out. You know what I mean? But he said, my grace is sufficient for you. My power is made perfect in weakness. Therefore, I will boast all money gladly about my weakness. I will boast all the more gladly about my weakness, so that Christ's power may rest on me. That is why, for Christ's sake, I delight in weakness, in insults, in hardships, and persecutions, in difficulties. For when I am weak, then I am strong. Amen to that. That's a bit of a blessing there to go over. Let's take a look at our little baby PEPE token while it's live here on what's going on. I want to see how PEPE is doing. PEPE will have a direct effect. Bitcoin goes nice and sideways or doesn't dump. I mean, it can give more strength to these smaller coins. I did sell PEPE off last night, and I'll explain why. Not all of my bags, just a little piece. One of the one I was attempting to swing trade yesterday for a massive gain. We'll show you why I had to cut PEPE off. I had to do the right thing, and we'll show you. Well, right now, PEPE has come all the way back down to the 618 fib level. And this was, last night I was looking at this like a descending triangle, see? To me, it was a descender, right? And it was likely to dump to the downside. I don't know where my actual my chart is, but my chart was showing you a descending triangle. Let me see here. I chart on a bunch of different places. I'm like, where's my descending triangle? It's only really on MEXC, so I'm wondering where else I would be posting that. But I saw this as a descending triangle, and wow, what a massive move, though, for Pepe, right? I mean, from when I first put that out there, look, no stop loss got hit in the making of that trade. You can see there's your angle, and that thing boomed up like 420% gains for Pepe, all right? Yes, I said Pepe the Frog. You heard it here first. And again, everyone's like, why are you shilling Pepe? Why do you buy Pepe? And honestly, you got to take advantage when the market's there and people are speculating. You got to take advantage. So look, I like to grab things up near the 618 Fibonacci levels. All right, this is the idea that I'm looking at, and this is what I'm going for. All right, so here you go. And if that continues down to the 618, and it will touch the 200 SMA, usually that coincides with a massive move back to the upside. And I could show you this many, many times. Look, what I'll do is I'm gonna do two things. I'm going to show you something about polka dot that's going to teach you how to accumulate in the bear market, but not just yet. I want to keep you hanging. And here's the thing: there's a lot of analysts on here that just do charts and analysts and this is where this is going. And you may keep me falling into that category, but I am also a macro trader that watches macro trends, and I've been able to call massive bottoms on multiple assets. I called the bottom of the S&P, right? I called the top of the dollar. I called the top of Bitcoin at that secondary level before it dumped to the downside. I called the bottom of Bitcoin down at when it was at that 29,000 to 30,000 level before it went to 70K. And I've bought the bottom for Bitcoin multiple times. I'm going to teach you how I buy the bottom for Bitcoin. I'm going to give away my basically years of my years of secrets today on this live stream. So if whoever's watching is going to get a gem of gems, all right, and we're going to do all that before we get into Jerome Powell. We have 20 minutes, and I have so much to show you, so much to break down. First thing I'm going to show you is the 8-day Gaussian channel, and we're going to talk about that, and I'm going to talk about how important it is for me to see certain signs in this that's really going to get us going, all right? Then I'm going to show you how I found the bottom for Polkadot and how we can look for other bottoms as well later on in life. That's advantageous. And then I'm going to teach you how I was able to buy the bottom of Bitcoin 4 times in my life, the absolute bottom. How did I do it? Was I lucky? Maybe. Was I prepared and also knowledgeable? I believe that's what luck really is, being prepared and knowledgeable at the same time. These lights are bright. Maybe I have to keep it real right now with my matrix glasses. Mr. Anderson. We see you, Mr. Anderson. It's time. It's time to come down, Mr. Anderson. You know what I mean? I'm on my Tom Crown-ish right now. Shout out to everybody here on the live. Thank you for coming on in. So first thing I want to show you is the Bitcoin Gaussian channel on the 8-day. And we're going to talk about that. You want to grab the all-time history index. Super important that you grab the right chart for the right time. These are important things that you want to be doing to break it down. We're going to go all the way back in the past. All right? We're going to show you some signs of where the bottom resides using the 8-day Gaussian channel. All right? Okay. So here's the first thing that we want to look at. All right? Is the fact that every time we fall out or we're in the channel, let's see, I want to go to the earliest possible time ever for Bitcoin. This is Bitcoin's all-time history index when it first ever even came out, before even people just breathed on Bitcoin. All right? And so look, nothing on the Gaussian there. Remember when it first came out, Bitcoin was less than a penny. All right? Look at that. Then there it is, less than a penny. Eventually becomes a penny. Even Bitcoin was considered a little tiny coin. Even Bitcoin was considered a tiny coin at one point in its life. Just these are insane concepts to think about, right? What coin are you watching right now? I'm not going to say it's going to become Bitcoin, but what coin are you watching right now that's less than a penny that could easily be $4, $5, $6, $7, $10, 1,000xing in the next few years? These are the days, everybody. These are the projects that you grab up when nobody's paying attention. This is how it is. My man wants auction. We're going to take a look at those super chats. Thank you for bringing them in. And then when the Fed meeting comes, I won't be able to do the super chats, right? We'll just be kind of getting it in and talking and breaking it down. So there, the Gaussian channel doesn't come into play there. But just remember, Bitcoin was less than a penny. I don't think people realize these concepts and understand how much it was less than a penny 10 years ago. Look how much it's gained over the dollar. What do you think is going to happen in the next 10 years? This is what you want to be paying attention to. So here, we did folly. We played a little bit. But once we got above this 200 SMA and got 3 green candles in a row, we were gone and off to the races. We would retest the outside shade of the channel, and then continue to the upside. That was back in 2012 for Bitcoin. We're going to keep going down memory lane and showing you these key concepts. So the bear market buys are when you're here below, outside of the Gaussian channel on the 8-day specifically too. It gives you a really good idea. Once you got above this middle line, we started to pump to the upside. Then we retested again, just like that last time, the outside layer of the Gaussian channel, and we were gone. So the idea is once you kind of come to this middle line, you usually don't come back out to this area, and you usually don't fall to the downside. So that's one thing to think about, one thing to break down for you all. So here we go again. I mean, we have the 8-day Gaussian channel. Once we got above it, we flew, we retested the outside of the channel, and we were gone, baby, gone. That was that 14,000 run up in June. I'll never forget it, but it did start a massive rally. Then we had the, pandemic, which I believe took the price further down than it ever should have, money printing and all sorts of craziness, and just, a lot of fear in the markets too as well. I believe caused by people to get the prices as low as they could, get everyone scared and scoop up the prices. We made a shoulder, a head, and a right shoulder, and we would continue again. We got through the line, and where do we bounce? Off the Gaussian outside layer. So just keep writing that down. But price bounces off the outside layer of the Gaussian channel. But again, whenever you get back above this middle line, you are gone, baby, gone. Now here we are again, getting above the dotted line, this middle line for the first time when we're in the red. This is the buy zone. These are the days. I mean, anywhere in this zone outside of the channel is the greatest place to purchase Bitcoin, in my humble opinion. I'm not a financial advisor. Nothing I say and do should be taken as financial advice. But these are just things that I want you to pay attention to. These are the concepts that are important. This is what's going to get you through. When everyone else is emotional and freaking out, you're going to need to have a stand. You're going to need to have something that keeps you level-headed no matter what's happening. And honestly, in my humble opinion, you got to have long-term outlooks. You got to be able to be a macro trader no matter how micro swings you're doing. You may be swinging the 15, the 7. You still want to know and look at what's happening. We take a look at our baby BOOKMAP, and BOOKMAP has way more liquidity to the downside here. And then we have 29,647, and we could pump up and get a massive sell wall at about 29,000. We're holding above 28,590. But now that the basis point is flat, we can't wait to see what they say. If they say yay or if they say no way, shout out to everybody here on the live. Thank you for jumping on in. Sorry for your loss, Sam. The legend of your father lives in you. Condolences, prayers, and blessings to you and your family. Thank you. Psalm 318, the Lord is close to the brokenhearted. He rescues those whose spirits are crushed. I'm literally taking everything you say as lose or win. Best advice out there, man. No, man, it's not. You're interpreting it as, but it is not financial advice, really. But look, now we're getting a bit of a short squeeze. Looks like we're headed up to 29,000 in my humble opinion. I just don't see how we won't pump with the news of a light red hike. Nothing kind of crazy. We saw what was happening. Sam doing commercial for lemon water. That would be hilarious. I'm doing it all the time. Sam is the man. Shout out to Jebba Tron in the house, man. God bless you for being here. Squeeze for the Sam. Who would you call? We know more about crypto than any FA. I know, it's true. It's true. I like it that I don't have to talk to anybody else to get my financial situation and say, sorry for your loss, Sensei. The legend of your father lives in you. Condolences and prayers and blessings to your family. Amen. Amen. Psalm, the Lord is close to the brokenhearted. Amen. Watching my mom break down. Look at the pictures from my dad when way back in the day. And look, now they're playing with the volatility. They're bringing it up, bringing it down, bringing it up, bringing it down. They're going to keep people in fear. I don't like to use these days to trade, so I personally would not be trading on Fed day. I have a good edge. My edge works out pretty well. It's 80 to 90% accurate, so why would I change that edge by throwing in put myself into a very erratic and sporadic situation? No need. That means that would make me lose my edge, and I would be an emotional guy who didn't know how to use my edge. My edge keeps me going. It's all I need. So it tells me, hey, just, look at the 8-day, getting a push up with the wick there, somewhat bullish pin bar that can push us up. Just like this bullish pin bar told us, hey, they were buying the price up without any price down. All right. And look, we are now above the 8-day Gaussian channel. Every single time we've done that, we've got a massive move out of the channel. Maybe we retested a few times, but we got a massive move out of the channel. That's how this bull run started. That's how this bull run started. And that's how the next bull run will start. I'm also going to show you how I was able to buy Bitcoin on the lows, what I used, what instruments, what tools, and how I did it. It's a lot simpler than you realize. It's not as hard as people think. Everyone thinks it's extremely difficult. In my humble opinion, I just don't see it that way. I simplify things because I am a complex mind. And so if I look at things in too many angles, I won't be able to see anything. So due to that reason, I'm always kind of, able to calm down and see exactly what I'm supposed to be seeing. Conflux, CFX, back up to 31 cents. It was down 7% on the day, but that was a coin I was heavy in, had to cut off with just, with break even. Phantom back to 42 cents, only down, but in the last hour, we're getting a bit 1%, 2%. And the Woo Network, which is another coin that we like, 89. In the top 100, these are top 100 coins. CFX is in the top 100. It's interesting. Flare, we all got our Flare. Shout out to the Flare airdrop out of Coinbase. I don't know if we get more. More should be coming eventually. And Singularity.net all the way back to 30 cents. Casper doing damage, kind of some of the old characters here. Arbitrum back in the game. Optimism, I got some of that. Immutable X, Polygon too at 99. Polygon needs to just get back above $1, and we're going to be okay. Let's take a look at auction USDT for that beautiful 199 baby blue super chat. So yeah, I could see Pepe headed down lower. I want to get into Pepe down here at about 6.4, 6.3. Remember, it had a massive run up. Went all the way to 15, really was the high. So you got to give it credit. Little coin that could has really just been trucking along. But here's the deal. I mean, its measured move is 21,671. All right. And it would bounce off the 618 Fibonacci level. And that's just something that we're looking at. And so I would wait for that to happen. Now, there's a chance it doesn't, and it retests this previous resistance. But it's more than likely will come and touch the 200-day moving average. These have to get closer. It could take some time, really. Maybe 4 or 5 days more for Pepe to kind of find its role and its chi again and begin to rip. So I'm happy that I did close out my Pepe idea. And now I just get to wait patiently for the next time Pepe's hot. I believe it is going to continue. Coinbase adding Pepe. So there's a lot of things to think about. All right. There's a lot of things to think about. Let's take a look at our baby auction like my man asked for. USDT auction on Binance. She called it Binance, the congresswoman. Come on, man. Auction, it looks really strange. I'll tell you, when I see wicks like this, I know there's low liquidity. I know people are getting scammed out and scammed in, and it just, I like a solid order book, you know what I mean? Me personally. And I can pick this up immediately. I know more about the coin just by looking at the chart. The chart tells me so much information because I've been doing it for so long. So it got wicked up, wicked back down. Moving averages are tight. This thing could make a move. Bottom in a way, but at the same time, just, you have to realize and remember that it had a few weird spikes. The liquidity's not all there. Me personally, I would forget about what I saw on the left side, and I would just see it break out. If it retests this trend line or the secondary trend line, like something like that, these are two areas I would be thinking to load up. That second area coincides with the value of 679. Okay. So that's just something I want you to be privy of and understand too. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here. And so we have the rate hike. If you didn't know, we have it. It is here. All right. It's 5.25. It was forecasted as 5.25, and it used to be 5%. They want to get inflation down to 2%, but I don't see it happening. I really don't. They believe like raising the interest rates, they're going to be able to lower, but they can't. They're going to have to print money. And then isn't the U.S. going to have to pay more for the money? So it hurts us both ways, really, either way. Investors await investment rate decision. Yeah, stocks were a bit subby. Oil tanks again as U.S. crude oil beneath 70 on economic worries. But it's better. I mean, it makes gas a little cheaper. We don't want it to continue to go up. There has to be a balance there for the oil prices. Yeah, so auction may double hit and come back up here to 950 or even to this high volume node. It just doesn't look that amazing. I did say I would go over it, but it's not my cup of tea. I would wait for the retest here or the retest right here off that node and off some of these previous rejection points. Okay. All right, now I have very limited time. Who here wants to know how to buy Bitcoin at the very bottom and exactly how to do it? Who here wants to know how to buy Bitcoin? If I don't get over 100 comments right now, I'm gonna keep my secrets alone. But if I know people are watching and they want to get it in, so let me know who here wants to know how I bought Bitcoin at the lows 4 times in a row and probably have done it yet again. All right. We got a yes. One person. We got a wave. Let me know. Yep. I need 100. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44. All right. You guys are really coming through. Okay. Who believes that what I give you will be the sauce to help you in your life? All right. Who believes I'll be the sauce to help you? Join that trading group. Hit the Discord, man. Jump on in today. I would greatly appreciate it. If you're still timid, join MEXC at least and get yourself going. Join MEXC at least. MEXC is having a campaign today. with the lifers. So that's pretty honorable and pretty cool. And I'm going to talk about Bitcoin Miami every single day. You got to come to Bitcoin Miami. So trade to win 2,500 USDT, right? And there's 21 hours left then the event starts. When it starts, you're going to trade. And trade. Whoever has the most amount of trade volume in this contest is going to win. And the top 5 people will gain 500 beans. It's pretty cool, man. That's like no joke, right? So users can check the referral code apply by clicking on the top right corner. Referral kickback. Interesting. Top initial assets refer to the total assets in your spot on futures account. And this just kind of breaks down some terminology for you. But this is the crypto lifer, man. You see it right there. Here we are together forming Voltron every single day. All right. All right. I got 7 minutes to show you how I was able to buy BTC on the very, very low. On the very, very low. And I did it multiple times. Number one, I did it with conviction. And when there was heavy fear in the market, I just took advantage of heavy fear. But that's not the only reason. Let me show you what I'm really breaking down. And honestly, that's a flag right there. It stays in this flag, up and down, up and down, up and down. It's eventually going to go to 38,000. I don't see what how the bank's collapsing and all that stuff. Like everyone says, don't look at the news, but this is a physical being. Like the bank is a physical being, and it's going down the tubes, right? And every time a bank collapses, more people run into Bitcoin because Bitcoin can't collapse like a bank. I asked my daughter, what's the difference between a bank and Bitcoin? She goes, well, in the bank, in Bitcoin, she's like, only you can lose your money. And I never asked her this. She came up with this on her own, which makes her super smart. She said, Bitcoin's safe. Bitcoin's like, you own your own Bitcoin. She's like, the only way you can lose Bitcoin is if you lose your own Bitcoin. And she's like, but the banks can lose your money, and that's written in the fine tune. Like I'm saying, it hasn't happened recently, but in other countries, they have taken people's bank accounts. They've been devastated, like never the same again. Something my sister was telling me today. So it's just, it's a serious thing. In America, we take it for granted because we have everything we need, but, it's not easy at all. All right, so you look at Bitcoin all-time history index, just like we were right now. See that beautiful flag? That does look like we're going to make some bacon on the beach. I like that. And it's always good to zoom out whenever you're kind of freaking out or acting kind of funny. Just zoom out, take a deep breath, and you'll realize, you know what? It's all gravy, baby. It's not that bad. It never was, and it never will be. All right? So here's the deal. I'm going to remove the moving averages for a split second. All right? I don't want to see those. And we're going to look at price action on this grand scale on like a 2-week chart. Now, the 2-week chart really was my go-to chart for accumulating Bitcoin. So I used the chart, number one. Secondary, I used RSI, number two. Don't really care about the MACD. It's not as important to me when I'm emptying a bottom, but it can't hurt. You know what I mean? But it's not something I fixated on. I fixated on the RSI and the stochastics RSI in conjunction. So this is Bitcoin. And what I did is like, when was the last time to buy? So it pumps up, right? And I started getting in 2016, early 2017. It continues to pump. Boom, boom, boom. And then you go back in the past and you're like, well, what did it look like before the pump? Like, what am I expecting, right? And you can see, see this elongated stochastic, this stochastic here. When the stochastic is extremely oversold, it's telling us that there's going to be a bit of a move, all right? And so that's already, I'm like, okay, those are the lowest prices. So wouldn't I want to get back in when this oscillator gets low again? So here you go. There's Bitcoin right here at about 30,000. I remember it almost went to 2029. It was like 30,131. I kind of remember that. And what I was doing, I was like, all right, the all-time. And then I also used the fear and greed index. I just want to point that out. On top of all that, I use the fear and greed index in conjunction because wherever that is can really leave an indelible mark on what's happening in your mind, what's happening with the markets, right? So here's the deal. Crypto fear and greed index. When it gets into the shaded area, and these things happen together, the stochastics are extremely low on Bitcoin, and so is the RSI. Look, you want to look at the RSI. When was it this low? It never was. Put a line right here laterally, fine. It was exactly bottoming out at the same level. So, and you can do the same thing with the stochastics RSI. You can be like, well, this one's pretty spot on. It hits the same place each time. Point of the story is this is consistent and key. Like, this is all you need to do. So I look at Bitcoin, and you have to have, like, the biggest in the game. You know what I mean? You have to have, like, bowling balls for, you know what I mean? It just is what it is. It's just how it has to be. You cannot be timid. If you want to make a lot of money in the market, you can't be. And again, I'm not a financial advisor. I'm not a guy saying you should be taking financial advice, but you go outside and you walk around like this. Are you going to get a job? Go walk into a job interview like, are you going to get the job? Probably not. You know what I mean? Very highly likely you will not. So that's just one thing I got to point out. So now on the 2-week chart here for Bitcoin, right, you can see that the best place to buy was low stochastics, low RSI. And when the fear and greed index was probably just not existent or the person wasn't working there at the time. You know, they came in the morning and reset or whatever it is. You know what I mean? It might be automated, but you get what I'm saying. So here's the deal. I'll look at the MACD just in case. Why not? And bring that in. And when I look at the MACD, you can see we definitely were getting waning in the seller's volume, right? So the sellers were waning off, number one. So that's a good sign. Number two, we were super low down here. Someone told me, hey, man, you should probably buy around 3,800. And I was like, let me see the charts. You know what I mean? Tone Vase was calling for $1,000 Bitcoin here. If you remember, Tone Vase was calling for $1,000 Bitcoin. So we had a lot of interesting people saying a lot of interesting things. All right. I don't know why it's not giving me my lateral lines here, which is my go-to. That's great. They took away my Alt V again. Yeah, it was a day where it wasn't working. Maybe when I'm like, I'll go to log and log back out. It's weird. Anyway, we'll figure it out. But the point of the story is I found this area here, all right? This area here, and I had low RSI, low stochastic, low price action, time to get in, right? Bitcoin was also in a falling wedge. Falling wedges break up 68% of the time. So that occurred, boom, get paid, massive amounts of Bitcoin, sell off a few, and keep living your life, right? Then we had the pandemic, which took us right down here, and the same idea was to buy this wick right here. And honestly, even right off the jump, you see a bit of a divergence here. You get a swing up to swing up. Well, this is pretty flat line. All right. And I'm keeping you entertained as we were about to head in to the Fed meeting. So I would align this stochastic with the RSI, and the fear and greed index would also be super shaded in this area. A 9, a 10, 11, or 12. So I bought. Then again, it happened again, and I bought again right around here, right? Because it was the same concept. We were oversold on the RSI, the stochastic, and lack of bearish momentum. Bang, right? There was also another kind of slight hidden bullish divergence there. As this was swinging to the downside, that was swinging to the upside. Okay, so here's the deal now. Another thing that I'm seeing on the 2-week is this. This is very interesting. The 2-week chart has swing up to swing up. These don't get involved in that area. And then that is a swing down. That is hidden bullish divergence right off the bat. You could even go here, pull this light to there. And that is hidden bullish divergence. Tells you that the trend will continue to the upside for whatever reason. And it won't be that long. Like, it's starting to react already and it broke through the highs. But that tells me that a big move is coming for Bitcoin. And then here, I bought Bitcoin here at about 32,000. Yeah, it might be down about $4,000 now, but I only bought a half of Bitcoin at that area, so it's down like $1.50. It's not even that big of a deal to me. The idea is this: oversold stochastics. You had a hidden bullish divergence because this is swinging down while that was swinging up. Told you that the trend was going to continue. You're going to make a higher high than the previous high. You don't know how high you're going to go, but that's what it said, right? And then also right here, the same scenario happened that I saw 1, 2, 3, 4 times, and then here we were again. Looking at the 2-week, we were oversold. The white line was coinciding with price action. If we take here too, you were hitting the 21-day moving average, which is interesting. All right, but you came down here at the very bottom. There was a bullish divergence, which you got to heed. If you see bullish divergence on the weekly, I mean, you got to scream it from the tower tops. And I was like one of the only people saying it. It's really weird. You think other people would have been like, yeah, and either like, I don't have really any true excuse for it, but all right, everybody, let's get into what Jerome Powell has to say. But that's how I was able to buy the bottom for Bitcoin numerous times since I found out about it. Low stochastic, low RSI, low stochastic, low RSI, low stochastic, and all 3 times played out very, very nicely. I knew what I was doing was kind of God's will. Some days you can just feel that what God's will is, and you can get it in, all right? All right. And let me get that Fed meeting up and running. I thought I would have sworn I had it, and did I close it? Now here it is. And here he goes. He will never get to 2%, I swear to God on my life. I shouldn't swear. I mean, I promise you, it's highly likely he will never get to 2%.
Without price stability, the economy does not work for anyone.
Yes, it does. The free market works pretty nice.
We will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by a 1/4 percentage point. Since early last year, we've raised interest rates by a total of 5 percentage points in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
Won't happen. I'm going to run for president on that.
Also continuing to reduce our securities holdings.
He'll never do that.
Looking ahead, we'll take a data-dependent approach in determining the extent to which additional policy firming may be appropriate. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. The pace of economic growth in the first quarter of this year continued to be modest at 1.1%, despite a pickup in consumer spending. Activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the first 3 months of the year, job gains averaged 345,000 jobs per month. The unemployment rate remained very low in March at 3.5%. Even so, there are some signs that supply and demand in the labor market are coming back into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. But overall, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 4.2%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials. We're committed to returning inflation to our 2% objective.
Never going to happen. I've been running on that. I'm going to run for president in
At today's
2032.
meeting, the committee raised the
Remember
target
I said
range
this.
for the federal funds rate by a 1/4 percentage
Write it down.
point, bringing the target range to 5 to 5.25%.
I'm the only one that's the
And we're
guts to say
continuing
it.
the process of significantly reducing our securities holdings. With today's action, we have raised interest rates by 5 percentage points in a little more than a year.
Massive
We are
volatility.
seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment.
Long squeeze it coming.
It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In addition, the economy is likely to face further headwinds from tighter credit conditions. Credit conditions had already been tightening over the past year or so in response to our policy actions and a softer economic outlook. But the strains that emerged in the banking sector in early March appear to be resulting in even tighter credit conditions for households and businesses.
Of course.
In turn, these tighter credit conditions are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain.
Dump city.
In light
You
of
guys,
these uncertain
you call that a
headwinds,
dump?
along with monetary
a
policy
7-minute
restraint we
move
put in
from
place,
500 to
our
370 is a
future
dump?
policy
You
actions
guys got to
will
wake up,
depend
man. Come
on
on.
how
Let's
events
grow up here.
unfold.
That's not a dump.
In determining the
I'll
extent
show
to
you
which
a dump.
additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will make that determination meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation. And we are prepared to do more if greater monetary policy restraint is warranted. We remain committed to bringing inflation back down to our 2% goal and to
Just want to say my dad died on Monday night. If you're new to me, my channel, you didn't know. So if you see me kind of wince or fight back a tear or two, you know, I have my funeral, the wake on Friday afternoon. It's been tough for me. So I just want to make that really clear
to set the
in case you
stage
think
for
you say
achieving
something that may
maximum
be
employment
extremely
and stable prices
insulting.
over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Gina.
Short and sweet. Ooh, come on, get the mic off there.
Hi, Gina Smilek, New York Times. Thanks
Gina,
for taking
we
our
love
questions.
you.
I
Smilek.
wonder if you could tell us whether we should read the statement today as a suggestion that the committee is prepared to pause interest rate increases in June. And I also wonder if the Fed staff has in any way revised their forecast for a mild recession from the March minutes. And if so, what a recession like what they're envisioning would look and feel like when it comes to, for example, the unemployment rate.
That was a wick to the 706.
So, taking
Coming
your
right
question,
back
of
up
course,
strong.
Today our decision was to raise the federal funds rate by 25 basis points. A decision on a pause was not made today. You will have noticed that in the statement from March, we had a sentence that said the committee anticipates that some additional policy firming may be appropriate. That sentence is not in the statement anymore. We took that out, and instead we're saying that in determining the extent to which additional policy firming may be appropriate to return inflation at 2% over time, the committee will take into account certain factors. So that's a meaningful change that we're no longer saying that we anticipate. And so we'll be driven by incoming data, meeting by meeting, and we'll approach that question at the June meeting.
He
So
won't tell you a dang thing, is
the
what he said to you. She's pissed. Like,
staff's
she didn't get
forecast
anything.
is, so let me start by saying that that's
like-
not my own most likely case, which is really that the economy will continue to grow at a modest rate this year. And I think that's, so different people in the committee have different forecasts. That's my own assessment of the most likely path. Staff produces its own forecast, and it's independent of the forecasts of the participants, which include the governors and the Reserve Bank presidents, of course. And we think this is a healthy thing, that the staff is writing down what they really think. They're not especially influenced by what the governors think, and vice versa. The governors are not taking what the staff says and just writing that down. So it's actually good that the staff and individual participants can have different perspectives. So broadly, the forecast was for a mild recession, and by that I would characterize as one in which the rise in unemployment is smaller than is.
Anyone who thought that was a dump, we just ate it right back up to the upside. They're going to flip-flop you all day long if you don't have your emotions intact.
The staff's
Get your emotions intact.
forecast for this meeting. We'll leave that to the minutes, but broadly similar to that.
Shout out to Professor Alucard. God bless you. Look at that. We were right back where we started the meeting. You guys thought it was a dump.
From the Washington Post.
All they did was
Thanks
just
for taking our
melt
questions.
all your faces.
I'm wondering if you can talk about
Rachel
the
Siegel.
account of possible effects of a debt limit standoff. You've said repeatedly that the ceiling must be raised, but do you see any economics effects of even getting close to a default, and what type of situation would that look like?
So I wouldn't want to speculate specifically, but I will say this. These are fiscal policy matters, for starters, and they're for Congress and the administration, for the elected parts of the government to deal with, and they're really consigned to them. From our standpoint, I would just say this. It's essential that the debt ceiling be raised in a timely way so that the U.S. government can pay all of its bills when they're due. A failure to do that would be unprecedented. We'd be in uncharted territory, and the consequences to the U.S. economy would be highly uncertain and could be quite averse. So I'll just leave it there. We don't give advice to either side. We just would point out that it's very important that this be done. And the other point I'll make about that, though, is that no one should assume that the Fed can protect the economy from the potential, short and long-term effects of a failure to pay our bills on time. It would be so uncertain that it's just as important that we never get to a place where we're actually talking about or even having a situation where the U.S. government's not paying its bills.
And just to follow up Was discussion around the uncertainty of a possible standoff, did that affect today's monetary policy decision at all?
I wouldn't say that it did. It was, of course, it's something that came up. We talk a lot about risks to the outlook, and that come up. A number of people did raise that as a risk to the outlook. I wouldn't say that it was important in today's monetary policy decision yet.
Steve.
Chairman, oh, thank you. Yeah, Mike.
Sure, Paul.
Steve Leisman, CNBC. Can you tell us what the Federal Reserve Board did in the wake of that February presentation where you were informed that Silicon Valley Bank and other banks were experiencing interest rate risks? And can you tell me what supervisory actions you've done in the wake of the recent bank failures to make sure that banks are currently appropriately managing interest rate risk? And kind of part three, but it's all the same question here. Do you still think this separation principle that monetary policy and supervision can be handled with different tools? Thank you.
Nonsense.
Sure. So the February 14th presentation, I didn't remember it very well, but now, of course, I've gone back and looked at it very carefully. I did remember it. And what it was a general presentation.
Oh, you
it
did
was
now.
An informational briefing of the whole board, the entire board. I think all members were there. And it was about interest rate risk in the banks and lots of data. And there was one page on Silicon Valley Bank, which
Steve
talked
Leisman.
about the amount of losses mark-to-market losses they had in their portfolio. There was nothing in it about, that I recall anyway, about the risk of a bank run. So it was, I think the takeaway was they were going away to do an assessment, a horizontal assessment of banks. It wasn't it wasn't presented as an urgent or alarming situation. It was presented as an informational, non-decisional kind of a thing, and I thought it was a good presentation, and as I said, did remember it. In terms of what we're doing, of course, I think banks themselves are many banks are now are attending to liquidity and taking opportunity now, really since the events of early March, to build liquidity. You asked about the separation principle. Like so many things, it's very useful. But ultimately, it has its limits. I mean, I think in this particular case, we have found that
Stop playing with the mic.
monetary policy tools and the financial stability tools are not in conflict. They're working well together. We've used our financial stability tools to support banks through our lending facilities, and at the same time, we've been able to use our monetary policy tools to foster maximum employment and price stability.
He's using his hands or something to hit the thing. Somebody turn that off, man. That was horrible.
I don't mean to be argumentative, but the staff report said SVB has significant interest rate risk. It said interest rate risk measurements failed at SVB, and it said banks with large unrealized losses face significant safety and soundness risk. Why was that not alarming?
Well, I mean, I didn't say it wasn't alarming. It was, they're pointing out something that they're working on and that they're on the case. That I'm not sure whether they mentioned. I think they did actually. They mentioned that they had taken regulatory action, or supervisory action in the form of matters requiring attention. So I think that was also in the presentation. I think it was to say, yes, this is a bank, and there are many other banks that are experiencing these things, and we're on the case.
Please.
Go to Victoria.
You were never on the case, my man. Never.
Hi, Chair Powell. I wanted
The only
to
case
ask,
you were on is
obviously, with the recent bank turmoil, we've seen
case of
multiple
donuts.
banks buy other banks, and I was just curious whether you think that further consolidation in the banking sector would increase or decrease financial stability, and whether you have any concerns about the biggest bank in the U.S. Getting even larger.
So, we certainly don't. I don't have an agenda to further consolidate banks. Consolidation has been a factor in the U.S. banking industry really since interstate banking, and before that even. It goes back more than 30 years. When I was in the government a while back, I think there were 14,000 banks. Now there are 4,000 and change. So that's going on. I personally have long felt that having small, medium, and large-sized banks is a great part of our banking system. The community banks serve particular customers very well. Regional banks serve very important purposes, and the various kinds of GSIBs do as well. So I think it's healthy to have a range of different kinds of banks doing different things.
5-second chart on the inverted head and shoulder.
That's a positive thing.
Measured move to 28,950.
I would just say, in terms of J.P. Morgan buying First Republic, the FDIC really runs the process of closing and selling a closed bank completely. That is their role, so I really don't have a comment on that process. As you know, there's an exception to the deposit cap for a failing bank. So it was legitimate, and I think the FDIC, I believe, is bound by law to take the bid that is the least cost bid. So I would assume that's what they did.
So, but do you have any concerns about
The fact that they're getting larger in general.
So I think it's probably good policy that we don't want the largest banks doing big acquisitions. That is the policy, and but this is an exception for a failing bank, and I think it's actually a good outcome for the banking system. It also would have been a good outcome for the banking system had one of the regional banks.
This man is insane.
Bought this company, and that could have been the outcome.
He's
but
so
ultimately,
off the Kool-Aid.
We have to follow the law in our agencies, and the law is it goes to the least cost bid.
It's not a Colby.
Kobe.
Thank you. Colby Smith with the Financial
Kobe,
Times.
we love you,
At the
Kobe.
March meeting, you mentioned that tightening of credit conditions from the recent bank stress could be equal to one or more rate increases. So given developments since then, how has your estimate changed?
Yeah, I think I followed that up by saying it's quite impossible to have a precise estimate of the words to that effect.
No answer.
But in principle, that's
No
the
answer
idea.
yet again.
When we've been raising interest rates, and that raises the price of credit, and that, in a sense, restricts credit in the economy, working through the price mechanism. And when banks raise their credit standards, that can also make credit tighter in a kind of broadly similar way. It isn't possible to make a kind of clean translation between one and the other, although firms are trying that, and we're trying it. But ultimately, we have to be honest and humble about our ability to make a precise assessment. So it does complicate the task of achieving, a
So good at
sufficiently
saying
restrictive
nothing while
stance.
talking a bunch
But
of
I think
words.
Conceptually, though,
So
we
good
think
at
that interest rates
Slippery.
In principle, we won't have to raise rates quite as high as we would have had this not happened. The extent of that is so hard to predict because we don't know how persistent
That's
these
bullish what he just said.
these effects will be. We don't know how large they'll be and how long they'll take to be transmitted. But that's what we'll be watching carefully to find out.
Just to quickly follow up, what does it suggest about the scope for the committee to pause rate increases perhaps as
That's a
early as
mess.
next month, even if the data remains strong?
He's
then
not going to
if-
say a
if it's
word
having
about
some
that.
kind
You
of
know he's not going to
substitute
answer that
effect?
question. Not going to answer that.
This is just something that we have to factor in as we want to find ourselves. So I guess I would say it this way.
Allow me to find myself.
The assessment
I'm lost.
of
So
the extent
insane.
to which
As we
additional
find ourselves.
policy firming may be appropriate is going to be an ongoing one, meeting by meeting, and we're going to be looking at the factors that I mentioned that are listed
This is
in
so
the
nuts.
statement, the obvious factors.
It gets more wacky each
That's
time.
the way we're going to be thinking about it. That's really all we can do. As I say, it does complicate. We have, a broad understanding of monetary policy. Credit tightening is a different thing. There's a lot of literature on that, but translating it into rate hikes is uncertain. Let's say it adds even further uncertainty.
just say you don't know.
We'll be able to see
just
what's
said
happening with credit conditions, what's happening with lending. There's a lot of data on that, and we'll factor that into our decision making.
He answered nothing.
Howard Schneider with Reuters. Thank you. So noting that the statement dropped the reference to sufficiently restrictive, I was wondering, given your
Howard.
baseline outlook, whether you feel this current rate of 5 to 5.25% is in fact sufficiently
They're
restrictive.
all shills. All
That's
these
going to
people.
be an ongoing assessment. We're going to need data to accumulate on that.
No answer.
Not an assessment that we've made.
We'll find out next week
that
when we
would
find
mean
out more,
think
is what he
we've
says.
reached that point, and I just think it's not possible to say that with confidence now. But nonetheless, you will know that the summary of economic projections from the March meeting showed that at that point in time that the median participant thought that
BOOKMAP
this
wants
was
28,000.
the
We'll see.
appropriate level of the ultimate high level of rates. We don't know that. We'll revisit that at the June meeting, and that's we're just going to have to
Print money.
before we really declare that. I think we're going to have to see data accumulating and make that, as I mentioned, it's an ongoing assessment.
A follow-up on credit, if I could you give us a sense of what the SLOOS survey indicated? It was already, I think 45% of banks were tightening credit as of the last survey. What did this one show, and how did that weigh into your deliberations?
So we're going to release the results of the SLOOS on May 8th, in line with our usual time frame. And I would just say that the SLOOS is broadly consistent when you see it with how we and others have been thinking about the situation and what we're seeing from other sources. You will have seen the Beige Book and listened to the various earnings calls that indicate that mid-sized banks some of them have been tightening their lending standards. Banking data will show that lending has continued to grow, but the pace has been slowing really since the second half of last year.
Wow, the volatility is insane today. They always critique this guy, you
Wall
notice?
Street Journal. Chair Powell, the argument around the end of last year and the beginning of this year to slow down the pace of increases was to give yourself time to study the effects of those moves. After the bank failures in March, as you've discussed, the Fed staff projected a recession starting later this year. So my question is why it was necessary to raise interest rates today, or put differently, if the whole point of slowing down the pace was to see the effects of your moves, and now you've, for the last 2 meetings, been seeing the effects of those moves. Why did the committee feel it was necessary to keep moving?
Well, the reason is that we, again, with our monetary policy, we're trying to reach and then stay at for an extended period, a level of policy stance that's sufficiently restrictive to bring inflation down to 2% over time. And that's what we're trying to do with our tool. I think slowing down was the right move. I think it's enabled us to see more data, and it will continue to do so. So we really we have to balance. We always have to balance the risk of not doing enough and not getting inflation under control against the risk of maybe slowing down economic activity too much. And we thought that this rate hike, along with the meaningful change in our policy statement, was the right way to balance that.
It was baked in, man.
To follow up, what you said in response to Howard's question, you'll need data to accumulate to determine if this is a sufficiently restrictive stance.
Which one?
Does that data need to accumulate, or could it accumulate over a longer period than a 6-week intermeeting cycle?
As I mentioned, I would just say that this assessment will be an ongoing one. You can't, with economic data.
Just say you don't know what you're doing, man. It's so much easier.
Take inflation from it. Look back. We've
so
seen
insane.
Inflation come down, move back up.
Come on,
2 or 3 times since March of 2021. We've seen inflation have a few months of coming down and then come right back up. So I think you're going to want to see that, that a few months of data will persuade you that you've got this right, kind of thing. And we have the luxury. We've raised 500 basis points. I think that policy is tight. I think real rates are probably, you can calculate them many different ways, but one way is to look at the nominal rate and then subtract a reasonable estimate of let's say 1-year inflation, which might be 3%. So you've got 2% real rates. That's meaningfully above what many people anyway, would assess as the neutral rate. So policy is tight, and you see that in interest-sensitive activities, and you also begin to see it more and more in other activities. And if you put the credit tightening on top of that and the QT that's ongoing, I think you feel like we may not be far off, or possibly even at that level.
Oh God.
Thank you, Edward.
Thank you very much, Chair Powell. Edward Lawrence with Fox Business. So if the Federal Reserve gets down to the 3% inflation,
Notice they always pick the same people
at the end of this year, or close to
Fishy,
it,
right?
Would it be okay for you for a prolonged period of 3% inflation and hoping for some outside event to move down to 2% target?
I think we're always going to have 2% as our target. We're always going to be focusing on getting there.
Would you be okay with a prolonged 3%?
It's let me just say that's not what we're looking for. We're looking for inflation going down to 2%.
Then what?
Over time.
Over time? That means over 10 years, 20 years, 100 years, 1,000 years?
But ultimately, we're
the
not
Earth was made over
to 3%,
time.
And then drop our
The
tools.
universe
We
was
have
created over time.
A goal of getting to 2%.
So weird.
We think it's going to
So
take some
ambiguous.
time. We don't think it'll be a smooth process. I think we're gonna need to stay at this for a while.
BOOKMAP says liquidity down to 28,100.
Once you get to 3%,
Wants to bring us
going from
down.
3 to 2. How does the
BOOKMAP
other
wants
side of the
28K.
mandate balance?
I think they will both matter equally at that point. Right now, you have a labor market that's still extraordinarily tight. You've still got 1.6 job openings, even with the lower job openings number, for every unemployed person. We do see some evidence of softening in labor market conditions, but overall, you're near a 50-year low in unemployment. Wages, you all will have seen the wage number from late last week, and it's whenever it was, and it's a couple percentage points above what would be
She's
consistent
laughing?
with 2%
She looks like she's
inflation
laughing.
over time. So we do see some
was like-
softening. We see new labor supply
I don't know, the
coming
camera
in.
will be
These are
on.
very positive developments, but the labor market is very, very strong. Whereas inflation is running high, well above our goal, and right now we need to be focusing on bringing inflation down. Fortunately, we've been able to do that so far without unemployment going up.
Matt.
Hi, Chair Powell. Matthew Boesler with Bloomberg News. So many analysts noted at the time of the March FOMC meeting that at least half of Fed officials' projections did imply or seem to imply that a recession was in their baseline forecast as well, given the strong first quarter GDP tracking estimates. And so I'm just wondering if you could kind of elaborate on, why you're optimistic that a recession can be avoided, given that that's the Fed staff's forecast, possibly also the broader committee's forecast as well, and also, of course, most private sector forecasters.
Yeah, I don't think, I know what's printed in the Summary of Economic Projections and all that. I don't think you can deduce exactly what you said about what participants think, because you don't know what they were thinking for first quarter GDP at that point. They could have been thinking about a fairly low number. Anyway, in any case, I'll just say I continue to think that it's possible that this time is really different. And the reason is there's just so much excess demand, really, in the labor market. It's interesting, as we
I wonder why. Maybe because we have our borders open
in 14 months, and the unemployment rate is 3.5%, pretty much where it was, even lower than where it was when we started. So job openings are still very, very high. We see by surveys and much evidence that the conditions are
Thank you for the
cooling
super chat. God bless you. Thank you for
gradually.
subscribing.
But
Subscribe to
it
the
really
channel.
is different.
Please
It
subscribe
wasn't
if you're
supposed to
not.
be possible for job
Subscribe to the
openings
channel.
to decline by as much as they've declined without unemployment going up. Well, that's what we've seen. So there are no promises in this, but it just seems that to me that it's possible that we can continue to have a cooling in the labor market without having the big increases in unemployment that have gone with many, prior episodes. Now that would be against history. I fully appreciate that. That would be against the pattern. But I do think that the situation in the labor market,
keep letting more and more
so
people
much
in the
excess
country,
demand,
and they can fill those
yet,
jobs. So is that how they're doing it?
Wages have been moving down. Wage increases have been moving down, and that's a good sign, down to more sustainable levels. So I think it's still possible.
It's good people aren't getting paid a lot.
The case of avoiding a recession is, in my view, more likely than that of having a recession. But it's not that the case of having a recession is. I don't rule that out either. It's possible that we will have what I hope would be a mild recession.
The committee also noted in March that wage growth was still well above levels that would be consistent with 2% inflation. Do you see that as well? And could you kind of explain, how you come to that judgment?
Sure. So we look at a range of wage measures, and then that's a nominal. And then so you assume wages should be equal to productivity increases plus inflation. And so you can look at the Employment Compensation Index, average hourly earnings, the Atlanta Wage Tracker, compensation per hour, basically those four and many others, and you can look at what they would have to run at over a long period of time for that to be consistent with 2% inflation. They can deviate. Corporate margins can go up and down, and there is a feature of long expansions where they do go down, where labor gets a bigger share toward later in a recession. Later in expansion. So, yeah, and we calculate those, and you have to take the precision with a degree of salt. But I would say that what they will show is that if wages are running at 5%, 3% is closer to where they need to be. Wage increases closer to 3%, roughly, is what it would take to be consistent with inflation over a longer period of time. By the way, I do not think that wages are the principal driver of inflation. You're asking me a very specific question. I think there are many things. I think wages and prices tend to move together, and it's very hard to say what's causing what. But I've never said that, that wages are really the principal driver, because I don't think that's really right.
Great. Chris Rugaber at Associated Press. When you mentioned profit margins, those have
Swear I brought that down. I
did
can't
expand
see why that's
sharply
so
during
loud.
this inflationary period. And while there are some signs that they are starting to decline, many economists note they haven't fallen as much as might be expected, given that we're seeing at least some pullback among consumer spending. So, speaking of causes of inflation, do you see expanded profit margins as a driver of higher prices? And if so, would you expect them to narrow soon and contribute to reduced inflation in the coming months?
So higher profits and higher margins are what happens when you have an imbalance between supply and demand. Too much demand, not enough supply. And we've been in a situation in many parts of the economy where supply has been fixed or not flexible enough. And so, the way the market clears is through higher prices. So I think as goods pipelines have gotten, back to normal, so that we don't have the long waits and the shortages and that kind of thing, I think you will see inflation come down, and you'll see corporate margins coming down as a result of a return of full competition, where there's enough supply to meet demand, and then you're really back to full competition. That would be the dynamic I would expect.
Michael McKee from Bloomberg Radio and Television. Can you tell us something about what your policy reaction function is, your policy framework is going forward? When you look at the economy at the next meeting, are you looking at incoming data, which is by definition backward looking? Are you going to be forecasting what you think is going to happen? Are you ruling out the rate cuts that the market has priced in?
I didn't catch the last part. Ruling.
Markets have priced in rate cuts by the end of the year. Do you rule that out?
Okay, I got it. So what are we looking at? I mean, we look at a combination of data and forecasts. Of course, the whole idea is to create a good forecast based on what you see in the data. So we're always looking at both, and it'll be the obvious things. It'll be readings on inflation. It'll be readings on wages, on economic growth, on the labor market, and all of those many things. I think a particular focus for us going now over the past 6-7 weeks now, and going forward, is going to be what's happening with credit tightening. Are small and medium-sized banks tightening credit standards, and is that having an effect on loans, on lending? And so we can begin to assess how that fits in with monetary policy. That'll be an important thing. We'll be looking at everything. Again, I would just point out, we've raised rates by 5 percentage points. We are shrinking the balance sheet, and now we have credit conditions tightening, not just in the normal way, but perhaps a little bit more due to what's happened. And we have to factor all of that in and make our assessment of whether our policy stance is sufficiently restrictive. And we have to do that in a world where policy works with long and variable lags. So this is challenging, but
Fake Gina has been removed.
Assessment,
Fake Gina has been
that's
removed.
What we're thinking.
What about the idea of rate cuts?
Bye, Felicia.
Yeah, so we on the committee have a view that
Look at that inverted head and shoulder breaking
down.
up to the upside here on the 5-second
Not so
chart. Just
quickly.
interesting to watch shapes
It'll take
play
some
out.
time. And in that world, if that forecast is broadly right, it would not be appropriate and to cut rates, and we won't cut rates. If you have a different forecast, and markets have been from time to time pricing in quite rapid reductions in inflation, we'd factor that in. But that's not our forecast, and of course the history of the last 2 years.
Hold on, I want to say we'll get up to the lot, but he keeps saying we want to go to 2%, we want to go 2%, but then he says he'll change what they do depending on the market. So why would he keep saying they're going to go to 2%? Anyone else get it, a facetious move there? You can't keep saying you're going for the same rate hike over and over again and then say that you're going to change the way you look at it depending on the data. So it's like, oh, we're going to drive this way. We're going to drive this way. Oh, but if there's an iceberg in the way, we're going to get out of the way. So why would you keep saying you're going to go to 2% over and over again? It doesn't make sense to me.
For us to cut rates.
Courtney?
Makes no sense. He's not making sense.
Kobe Brown from Axios.
Kobe Brown.
I'm curious how you view the role of the overnight reverse repo facility in the context of the current
Courtney
banking
Brown.
stress. Do you think it's contributing to the stress by making it more attractive for money market funds to compete with banks for deposits? And did the committee discuss any changes to the structure of the facility, or do you see that being put on the table in the future? Thanks.
Sure. So we looked at that very carefully, as you would imagine, and it's really not contributing. We don't think now. It hasn't actually been growing. It moved up, moved down, and then moved back up to where it was. What happened in the when there were the big deposit flows, which by the way have really stabilized now. What happened was institutional investors took their uninsured deposits and put them in government money market funds, which bought paper from the Federal Home Loan Banks and things like that. Over the course of maybe the last year, retail investors had been gradually, as they do in every tightening cycle, they've been gradually moving their deposits into higher yielding places such as CDs and other things, including money market funds. So that's a gradual process that is quite natural and happens during a tightening cycle. What was unusual really was the institutional investors moving their uninsured deposits and spreading them around and things like that. But it doesn't seem to have had any effect overall on the overnight repo facility. That is really there to help us keep rates where they're supposed to be, and it's serving that purpose very well.
Sarah.
Sarah Ewald-Weiss, CBS News. I want to go back to the debt ceiling for a moment. I know you talked about that in terms of fiscal policy, but can you just speak towards what the impact of a default would mean for Americans across the country, the markets, and borrowing?
Yeah, I would just say it's.
We go bankrupt.
I don't really think we should be. We shouldn't even be talking about a world in which the U.S. doesn't pay its bills. It just shouldn't be a thing. And again, I would just say we don't. No one should assume that the Fed can really protect the economy and the financial system and our reputation globally from the damage that such an event might inflict.
Yikes. So we have to raise the debt ceiling. So they have to print money. So he's going to have to stop putting up their interest rates. It's what he just said. He can't raise the interest rate. You hear me? You get what's going on here?
I
got you, baby. I got you.
To the
Go all in, baby.
Supervisory lapses
Not
at
financial
Silicon
advice.
Valley Bank. A policy change in 2019 to exempt all but the biggest banks from strict scrutiny, and also what he called a sort of cultural shift towards less aggressive oversight. You were here in 2019. Do you share that view, and what would it take to get the stronger oversight that you and he said in your release would be necessary?
2%.
So I didn't take part in creating the report or doing the work, but I have read it, of course, and I find it persuasive. I mean, I would say it this way: a large bank, not a very large bank, a large bank failed quite suddenly and unexpectedly in a way that threatened to spread contagion into the financial system. I think the only thing that I'm really focused on is to understand what went wrong, what happened, and identify what we need to do to address that.
He fixed his
Some of that
microphone.
It may just have been technology evolving. We have to keep up with all
Thank
that.
you.
But some of it may be our policies and supervisory and regulatory, whatever. Well, what our job is now is identify those things and implement them. And that's kind of the only thing I care about is. And I feel like I am accountable for doing everything I can to make sure that that happens.
Obviously not.
Thank you. Evan Reiser with MNI Market News. Chair Powell, are we in the early stage or nearing the end stage of the banking turmoil among regional banks? And secondly, do you still have a bias to tighten rates? Is that what the statement is saying?
I like it. Fish for some information.
So,
Make him say something. Make him say something.
I guess
Let's get
I
the
would
likes
say
up
it
to the
this
watchers.
way.
I would greatly appreciate it. Hit that like button, please. Hit that like button.
There were 3 large banks, really, from the very beginning that were at the heart of the stress that we saw in early March, the severe period of stress.
He acts like one bank's
Those have
different than the
now
next. They
been
all do the
resolved,
same thing. It's
and
not
all
resolved.
the depositors have been protected. I think that the resolution and sale of
By printing money.
of First
Depositor
Republic
protected by printing money. How
kind
much
of
more money are you
draws
going
a
to print?
line under that period?
Oh my gosh.
Is an important step toward drawing a line under that period of severe
insanity.
stress. Okay. I also think we are very focused on what's happening with credit availability, particularly with what you saw in the beige book, and you will see in the SLUICE is small and medium-sized medium-sized banks who are feeling that they need to tighten credit standards, build liquidity. What's going to be the macroeconomic effect of that? More broadly, we will continue to very carefully monitor what's going on in the banking system, and we'll factor that assessment into our decisions in an important way going forward.
Moving forward.
Thank you, Fed Chairman. Greg Robb from Market Watch. I just wondered if you've done any reflection on your own actions during this crisis and leading up to it over the last, since you've been Fed Chairman. I think I've heard you say a couple of times that you deferred to the Vice Chair for supervision. Do you think that was the right way to go about this? And yeah, comments on that. Thank you.
Sure.
One,
So
two,
let me
punch.
say, first of all, I've been chair of the board for 5+ years now, and I fully recognize that we made mistakes. I think we've learned some new things as well.
Oh, come on.
And we need to do better. And as I mentioned, I thought the report was unflinching and appropriately so. I welcome it, and I agree with and will support those recommendations. And I do feel that I'm personally accountable to do what I can to foster measures that will address the problems. So on the Vice Chair for supervision, the place to start is the statutory role, which is quite unusual. The Vice Chair, it says, shall develop policy recommendations for the board regarding supervision and regulation of depository institution companies, and shall oversee the supervision and regulation of such firms. So this is Congress establishing a 4-year term for someone else on the board, not the chair, as Vice Chair for supervision, who really gets to set the agenda for supervision and regulation for the Board of Governors. Congress wanted that person to have political accountability for developing that agenda. So the way it works, the way it has worked in practice for me is I've had a good working relationship. I give my counsel, my input privately, and that's, I offer that, and I have good conversations, and I try to contribute constructively. I respect the authority that Congress has deferred on that person, including working with Vice Chair Barr and his predecessor. And I think that's the way it's supposed to work, and that's appropriate. I believe that's what the law requires. And but it isn't. I wouldn't say it's a matter of complete deference. It's more, I have a role in presenting my views and having an intelligent discussion about what's going on and why, and that's my input. But ultimately, that person does get to set the agenda and gets to take things to the Board of Governors, and really in supervision has sole authority over supervision.
A peanut. That's funny. But we don't want to put down people's looks.
Was there anything that, decisions that maybe you regret now in light of what's happened?
I've had a few. Sure. I mean, who doesn't look back and think that you could have done things differently? But honestly, you don't get to do that. Again, my focus is on control the controllable. As one of my great mentors used to always say, control the controllable. What we control now is make a fair assessment, learn the right lessons, figure out what the fixes are, and implement them. And I think that Vice Chair Barr's report is an excellent first step in that, but we've got to follow through.
Hi there, Megan Casella with Barron's. Did the possibility of pausing at this meeting come up at all, and how seriously was that considered? I'm curious if you can give us any color as to whether there were any initial
Give me some
concerns about
color
raising rates
over
again,
here.
or what those discussions entailed.
Megan Casilla.
So support for the 25 basis point rate increase was very strong across the board. I would say there are a number of people, and you'll see this in the minutes. I don't want to try to do the head count in real time, but people did talk about pausing, but not so much at this meeting. That there's a sense that
that should make the price pump. Let's go.
We're much closer to the end of this than to the beginning. That as I mentioned, if you add up all the tightening that's going on through various channels,
let's go.
We feel like we're getting close or maybe even there. But that's going to be an ongoing assessment, and we're going to be looking at those factors.
Pick me.
That we listed in to determine whether there's more to do.
I'm curious too how to interpret that and the changes to the statement. Is the bar higher now to raise rates at the next meeting, or would a strong jobs report or inflation print be enough to push the Fed to tighten again?
I don't want to. I couldn't really say. I just think
it's a good question.
I think
he won't answer anything that makes him look like he's doing anything.
And I think we can afford to look at the data and
When
make a careful assessment.
Van the Moon.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. You mentioned a few times about the lessons you learned from the banking crisis, that you would learn the right lessons. What are those lessons?
No, he's not going to mention that.
Would start with.
Don't ask him anything that make him actually answer questions.
Which is,
watch this.
The run on Silicon Valley Bank was out of keeping with the speed of runs through history, and that now needs to be reflected in some way in regulation and in supervision. We know now that we know it's possible. I think no one thought that was possible. No one had. I'm not aware of anybody thinking that this could happen quite so quickly. So I think that, that will play through. It will be up to Vice Chair Barr to really take the lead in designing the ways to address that. But I think that's one thing. I guess I would just say that then we're going to revisit. It's pretty clear to me anyway. It's clear that we need to strengthen both supervision and regulations for banks of this size, and I'm thinking that we're on track to do that as well.
Can you be any more specific on stress testing or looking at banks that have specific concentrations in certain parts of the economy?
Yeah, that's what Vice Chair Barr's role really is, and he'll take the lead on that.
Okay, thank you.
Thank you.
What's up with the mic, man? Wow, that was it, dude. So vague. Hey, and that's it, everybody. In and out, dude. He mailed that one in, dude. That was it. He mailed that one in. That was it. Everyone, I got to run and be with my family. Happy we got to do this together. I'll assess the market in about another hour here. We're going to keep watching this 7-minute time frame. All right? And I'm going to look at that one last time, open it up for you, and then we're going to be out of here for the day. Thank you so much for jumping on in. I appreciate you all for being here. This 1-minute flag looks like you could make a nice pump back to the upside. That's a falling wedge pump. You got a higher high there, higher low. Make sure we can put another higher low. My measured move for Bitcoin is 29,178. I mean, it looks like they aren't going to raise interest rates again. He didn't really mention. He didn't give us a lot of data. He played games a lot. He did not want to sway the markets for whatever reason. He either had a buck somewhere or he has some investments he doesn't want to get disheveled. Whatever it is, we don't know. I don't want to spread FUD or any fake information, but pretty strange there. He was the most least transparent as he's never transparent, but he was the least as he's ever been. He barely said a word. He didn't say much at all. We'll go back to Bitcoin one more time. We're going to look here at the 1 hour time frame. 1 hour time frame still in a flag, and it's low on those stochastics with low selling pressure. If I had to make a call, which I do every single day, it's likely we pump up to the top of this channel, at least to this red line here. And then we're going to see what happens at this high volume node at about 29,263. When we get there, we'll see what happens. It looks like we're about to come to the upside. If I had to make an assessment, it would say that we come to the top of the channel, bottom of the channel. In the next 2-3 days, a massive move is coming for Bitcoin. Either it's going to attempt to break out or break this previous high at 30,800, or we're going to barely retest this point of control here at about 28,040 and head all the way back to 24.25 and then maybe even 23.50, which is the measured move. We don't have to do anything really. here's the deal. I'm going to use a big highlighter. If we break out, we get a bounce up. If we break down, we get a bounce down. These are the two areas you're looking for a retest to the upside or to the downside. Again, let's let the dust settle after Fed Day, and I'll be back in the Trader Group not too long from now. God bless all of you for being here. Thank you for jumping on in. Appreciate each and every one of you for sharing your most precious asset with me, and that is your time.